Shares of Netflix have run up nearly 5% this year alone, and adding to gains, big ones over the past 2 years. Investors now wonder if the climb will continue when Netflix reports quarterly results next week. Julia Boorstin takes a look.
Why do you hate us so much?
Because it's fun.
Friday, Netflix is launching new exclusive content. Lemony Snicket's A Series of Unfortunate Events, based on a best-selling book series and starring Neil Patrick Harris. This ahead of Netflix earnings Wednesday, when investors will look to see how this kind of original content is driving subscriber growth. The big question is whether shares will follow in the pattern of last year's 8% gain or the massive 134% growth the prior year, thanks to subscriber growth.
Our check suggests that the consumer was a little bit more interested in Netflix perhaps in the fourth quarter than they were in the third quarter.
Netflix shares are already up nearly 5% this year. JP Morgan added Netflix to its U.S. focus list. Drexel Hamilton raised its price target on the stock. And Liberty Media's John Malone praised CEO Reed Hastings, saying he broke the mold. And Sunday night, Netflix won 2 Golden Globes for its new series, The Crown. Though Netflix doesn't report ratings, its shows continue to dominate in viewing. 21 of the 25 most popular original streaming programs last year were Netflix originals, with Orange is the New Black and Stranger Things in first and second place, according to Symphony Advanced Media. This despite rivals Amazon and Hulu also investing in originals. The question now, will Netflix face a massive threat from Apple, which reportedly is about to make a big investment in original content as well?
Netflix has proven remarkably adept at dealing with a range of threats. So what we hear from Apple is probably one of the lesser threats.
While Netflix has the advantage of a head start on Apple and all its streaming rivals, analyst Crockett says there's another key risk to watch: regulatory challenges in the Trump administration.